Welcome to the weekly wrap up. Sorry, I am a little late in getting this out. I've been out most of the week and just back in the office this morning. I was with my daughter on her senior trip and thinking I was going to be all refreshed and ready to hit the ground. And if anyone's been on a senior trip, you know that is not the case. So it took me a little longer this morning to get things going. But nonetheless, here is your update on what's happening. We are ending the week with interest rates slightly better than where we started. We had lots of volatility this week. We started out on Monday decent. Then as the day went on, rates increased. Tuesday, rates increased. Wednesday, rates increased. Thursday, we got a little reprieve. Friday, we got a little reprieve. So as I'm watching from afar, all I see are posts like interest rates going down, interest rates going down. But what people forget is that they're coming down from the highs that we saw Tuesday, Wednesday, Thursday. So it makes us almost even to end the week. So always keep in mind perspective and where we're coming down from, because it's hard to sometimes gauge on some of those posts or some of the media outlets on where we're really starting. Fed meeting. Fed came out, spoke. They rose federal funds rate 0.25%. Keep in mind that it's not mortgage rates. That is what banks trade money at. And this is a really good indicator because it really shows that the Fed is more concerned with fighting inflation than they are with saving the banking industry or bailing them out currently. So that's a good thing. We want them to fight inflation and we want them to have that be their first mandate, because that's what'll bring interest rates down for us. However, I find it interesting that their balance sheet has increased almost $400 billion. And the reason that is because they are helping banks. Banks are borrowing from them to keep up their capital requirements. And what this means for us or for our consumers is banks are going to probably be quite a bit tighter on their lending. And that also will help inflation come down. But it also means banking fees for you and I, the common consumer, and our clients will likely increase. So last thing I want to make sure that you guys know is there are lots of things out there on the media, and we have to be the voice of reason. Diana Oleg, who is a contributor to CNBC, came out and said that home prices have gone down 0.2% month over month. And what she really meant to say was the median home price. But we are still seeing homes that are appreciating, and we are still seeing in general in our Twin Cities market anywhere from 1.5% to 2.5% appreciation expected over the next year. And so I could give you a laundry list of what Diana Oleg has said in the headlines, and then the opposite has happened. If you want that chart, I will give it to you, because again, I think that people hear headlines and all of a sudden they think home prices are coming down. I can negotiate, I can lowball, I can get seller pays. And we all know that that's not quite the case. So to be able to combat that information is super important. So if you guys want that chart, let me know. I will be happy to send it to you on all of her misspeaking over the years. And lastly, I want to make sure that you guys know April 15th, we talked about foreclosings after April 15th and the conventional mortgage changes that are happening. Great news is the debt ratio add-on that was part of that change has been deferred until August. However, the credit score changes are still going into place for anyone closing after April 15th. So basically on conventional loans, anyone that has a 720 credit score to about a 750, and they are not first-time buyers who make $117,800 or less, their interest rates will be increasing simply because of the credit score adjustments that came out about a month or two ago. So if you have questions on that, let us know. If there's anything else that we can be doing to help or to give you good info that you can be talking about with your clients, please do not hesitate to let me know. That's what I want to make sure that we're doing. Talk to you soon.